Hey, everybody, Tom Gentile. Welcome to another edition of our Profit Strategies podcast with me again this week, as he is every week, almost every week. Chris Johnson. Chris,
Hey,
how's it
Tom.
going?
How are you?
Things are good. Things are good. I mean, we need to talk about. I got stuff written down here I want to cover with you today. The markets earlier this week, I talked about a market rollover. We were looking at the money calendar. We'll check in on that and see what's going on. Stocks that you're looking at in the coming week. I want to talk about BTC stocks because maybe I wasn't clear on one of our recent podcasts of equities or stocks that you could get into if you believe Bitcoin is still on the run to the upside, or if you think Bitcoin is going to get a pullback and you don't want to short Bitcoin, or maybe don't know how to short Bitcoin. Perhaps one of these stocks could give you a move to the downside. So there's that. And I want to finish out today on brokers. And there's a reason for that, and I'll get to that in a little bit. But stock market, what do you think, Chris?
This I said something a couple days ago, Tom, and it's one of those things where you say it out loud, you wish you could take the words back, but it was right. Market got that bounce earlier this week. And everybody was very quick, including myself, to say, hey, this is exactly what we're looking for. Small caps took off. You saw, some of those heavyweight technology stocks grab a bid again. It was nice to see technical support come in for this market, but that falling knife feel, and I use this phrase, that falling knife feel, you never try to catch the falling knife, but at the same time, every once in a while when the knife hits the ground, you don't want to try to grab it so quick. You can still nick yourself. It might spin or something. I feel like that's the way this market is. It needs to test that bottom that we saw earlier this week. That's what we're seeing now.
Yeah. I mean, S&P really, earlier in the week, got a bid, like you said, jumped up, and then later in the week started to fall down again. I wonder if this is the Cathie Wood effect. What do you think? I mean, I want to go out. So she was a big buyer of Tesla earlier in the week. I mean, if you don't know Cathie Wood, she runs several of the ARK funds, which are all really geared into technology, clean energy alternatives. But she really crowds in, and it's had fantastic results. But we're down double digits this week as the markets had fallen off. And when I look at somebody like a Tesla, where, a lot of people say she bottom ticked that earlier in the week. Mm-hmm. But then you saw the follow through on Wednesday, and you saw the pullbacks again after that. And so I guess time will tell whether she bottom ticked it or whether it was just a feed in for more people that want to take their positions off the table. Now, ARK also was in the news because they had record outflows too. Meaning that just means that a lot of institutions, high net worth individuals, et cetera, were redeeming money. So they had to sell something. They may have gotten into Tesla, but they had to sell something to handle redemptions.
Right.
So,
you know what I found interesting, and let's expand on that and take it to how these fund managers like Cathie Wood have to operate. And it reminded me when I saw this news story that now you have Reddit groups that are trying to mimic exactly what she's investing in. So they get those reports off Edgar and they say, okay, this is what she's buying, and they mimic it. It reminded me of Bill Gross back when Bill was the bond king and before he left PIMCO, and how everybody wanted to move, and that creates a crowded trade in and of itself. It makes Cathie Wood's job a little bit harder, a little bit of a headwind versus when she was operating in a vacuum on her own, picking her stocks. What do you think about that, Tom? When a fund hits this headline state where everybody's trying to buy the same thing, how much does that start to hamstring what ARK investments in this case? I
mean, not just them, but typically, when hedge funds get too big, mm-hmm. There's only one way that they go after that. If you take a look at hedge funds going back for decades, more hedge funds have lost more money for investors than they ever made. And let me explain this. When a hedge fund starts out and they have like maybe anywhere from say 10 million to 100 million to even $1 billion, you don't hear about these hedge funds when they're small. You hear about them when they have a fantastic year. Then all of a sudden, all this money gets attracted into that fund and blows it up from $1 billion to $50 billion. And as a hedge fund manager, you may not be able to employ the same strategies at the $50 billion level or the $100 billion level that you did at the $1 billion level.
Yep.
And that's when things, and there's nothing you can do. I mean, to try to mimic the returns that you had earlier. It's kind of that law of nature, where we know the stock market has waves, and we have that. You discussed that on an earlier podcast where we go through four different areas in the life cycle of the stock market in emotional cycle. And that seems to be the same with hedge funds. They start out, they have a plan, they work their plan, and sometimes they see some early growth, and then they crowd into that growth.
Right.
And some of them fall apart, but some of them blow up and get even bigger. Then they get picked up by media. Oh, the fund's done this, the fund's done that. I mean, honestly, who heard of Cathie Wood even just a few years ago? Now, all of a sudden, she's the hottest thing since sliced bread.
Right.
And my prediction is that the funds are going to underperform. And all these people that got into these hedge funds, these big names and big name companies that had to be a piece of this, more than likely are going to underperform to the S&P. That's my thought.
I agree. Hey, let me segue this because we always talk crypto a little bit, and I know you're going to want to talk. You've already said you want to talk about it. You said something about nature and numbers. Talk about nature and numbers and a mathematician from a long time ago, Fibonacci. I've been watching Fibonacci levels on Bitcoin, on a couple of the securities that are tied closely with Bitcoin. The selling here is it's creating a technical opportunity, according to Leonardo of Pisa, the Fibonacci, the father Fibonacci here.
Yeah.
What are you seeing right now in crypto, Tom?
Well, you know what? I have not looked at Fibonacci on crypto, but it's interesting you brought it up because I'm now doing live streaming on YouTube. I did my first. I did an unofficial live stream last week. It was a total disaster. But earlier this week, I did my first, let's call it official live stream. It went very well. And what I'm doing this because I'm seeing folks out there live streaming that hey, I was in my 20s once too. And I thought I knew a lot then. And the only difference between me in my 20s and me in my 50s right now is that I got something the 20-year-olds don't. Experience in both winning and losing. And that experience, I believe, leads me to offer something a little bit more than just getting on YouTube and showing charts and saying, hey, that one's going up. Hey, that one's going down. Oh, wow, to the moon. So in my live stream I did last week, I actually used our fib levels to calculate prices because that's something a lot of these guys just aren't doing. I mean, they can't spell Fibonacci, let alone understand how to use it. But the thing that we're doing with the live stream is we're trying to bring things to the table, like we're doing in this podcast, that you might not get in most other places. So I'll tell you what I will do. Chris, you brought up a great segue here. For my next live stream, I will do fib levels on not only cryptocurrency, but I'll also do it on stocks that follow BTC. Nice. And so, I want to get into that in just a moment. But let's talk about the rest of the market here real quick. So, when I look at the stock market and, the bond market. So, if we look at what's gone on with bonds this week, bonds kind of had a little bit of an implosion. That was last week, and that's still carrying over. I mean, you take a look at the last 10 days of bond prices and TLT. TLT was 150 10 days ago. Mm-hmm. TLT is now in the 130s, and this means the yields are going up. I mean, these yields, especially on the 10-year, these yields on the 10-year start to continue to get a little bit higher. That's what's causing, I believe, the sell-offs or the rumble. The thunder from down under in the S&P 500, and more importantly, the NASDAQ, is that we're seeing bond yields actually going up. And we really kind of hit it. We broke through the 150 level more than 2 weeks ago. We haven't seen it. And now we're down in the 130s. And the other thing that I've noticed implied volatilities, option traders, and the creep is happening right now. We're talking about IV levels that were at 10 earlier this year that are now trading in the low 20s. So what we've seen is a doubling in option premium on TLT. TLT is one of the most stable things to be in and out of. So the fact that we're seeing option traders now wanting double for their at the money calls and puts than where they were just last month, that's pretty noticeable.
Yeah. You know what? Speaking of volatility, I'm looking at the VIX right now, the fear gauge, CBOE
Yeah.
volatility index. And a lot of people may not make that association between volatilities that they're paying, whether it's for put premium, call premium, et cetera, in the VIX. Why don't we go into that for just a second? Is the VIX is looking to make maybe a new high for a second time this week for the year. Well, maybe not the year. I'm squinting actually too much. For the month, certainly. February, where there was no volatility. Now we got the VIX creeping up. What do you think of the VIX popping a little bit here, Tom?
You know what? I see that, but what has not happened yet, and I'm still waiting to see it happen, is the VIX futures, VXX.
Mm-hmm.
That's the VIX futures ETF, which yesterday made a new low, or midweek made a new low, and it got a little bit of a move here. But if you take a look at VXX right now is trading around 15, a little around 15. If we see that pop above 16, that puts us where we were on VXX just about a week to 2 weeks ago. That would make me think that not only VIX cash is now seeing some bottoming, but even the VIX futures, which is the future call, the future outlook for the VIX, tending to go higher as well. And then, the other things that we want to pay note of is if you take a look at cash. Now, cash has not participated yet in this because the U.S. dollar is still falling lower, which is shocking. You'd think that, okay, well, we're not. So what are traders doing? They're not selling stocks to get into cash. They're selling stocks to get into fixed income like the bond market. That's what I'm seeing. And the only thing I see going higher right now, other than bond prices, are certain commodities like oil, USO, new highs for the year. All right. So, I mean, that dirty energy is where the money seems to be going right now. I mean, when you look at, and real quickly, gold, you and I were looking at gold earlier today. Gold's back down to hitting that 166 area of support. Once, twice, this is a triple bottom on GLD. So GLD, very, very interesting to see whether we're going to hold that area and hold that line, or whether prices of gold are going to continue lower. And then when you look at FANG, Facebook underperforming for the week, Apple continuing to move lower. I see Amazon, that's also moving lower. Amazon's on the 3,100 area of support. Do we crush through that? 3,000, I think, is my level of support. That 2,950 to 3,000. That was the lows that were back in November. And Facebook's really kind of been moving sideways and lower since their earnings, which is really shocking. They doubled their earnings per share, and yet the stock, that was the high for the year.
That's one of those crowded, that I use that phrase crowded trade. And I think that is the poster child. Amazon has been kind of one of those. It's a lot of people don't, until they look at the chart, that stock has been trading really between that 3,000 and 3,200. It's been locked in a zero volatility, just kind of creep sideways here.
Yeah.
That was one of the stocks that pulled us through 2020.
Mm-hmm.
It is truly one of the companies that we saw that was the foundation for the market, if you will, those large cap stocks. I think they've just found their way, and we haven't hit on it yet, but this idea of the second half of 2021 reopening, part of Amazon's problem is that you've got now the non-essential retailers that are starting to just take off. Abercrombie and Fitch, Buckle, American Eagle, because people are discounting and looking at it from the perspective of, hey, 2021 is going to be good. And if you need proof of that, look at L Brands this week with their earnings.
And you mentioned it a couple weeks ago and mentioned it again last week. And here we are with clean energy, which is getting their clock cleaned right now. one not worse that I could find other than Workhorse. So
Oh,
Workhorse did not get the government contract. It ended up going to Oshkosh. And
right.
Workhorse earlier this week was in the 30s and immediately dropped to $15 a share. I mean, this thing dropped 50% in one day. It's down better than 65% just in the last 2 weeks. So all the hopes and dreams of people that got into Workhorse, and more importantly, the ones that got into Workhorse over the last month, have just,
Mhm.
to see that stock drop 50% in one day had to crush a lot of traders. And again, it was a risky stock to get in to begin with.
Right.
Everyone was vying for that contract. And so, it's almost like an earnings report. I don't like trading through earnings. I like trading patterns right up until earnings and then dumping that risk off on somebody else. And, everyone knew that the government was going to pick somebody and it was coming. And
Right.
it looked like smart money knew the week before that maybe Workhorse wasn't the one
Oshkosh
that was
was
going to
going
get it.
up. Yeah. OSK was going up. You know what? I'll full disclosure. And Tom, you're killing me. You're rubbing dirt in it. I like Workhorse. Cincinnati company, Tom. I always tell people when I talk about it on the live streams and that, smile when
Yeah.
you say it because their headquarters are about 15 to 20 minutes away from me. And I've seen firsthand the company from the beginning here starting to grow. And I won't call it a dreamer. One of the rules is you never fall in love with a stock, right?
Right.
Because you put those rose colored glasses on. When I look at Workhorse right now, and it is a stock, obviously, that, as you mentioned, got rocked.
Right.
The message that you immediately saw, and by the way, on a side note that I think is funny, have you seen a picture of the new Oshkosh truck or what they were saying it's going to look like?
I haven't.
Well, it looks terrible. So, but then again, I maybe smile when you say that. Anyhow,
Yeah.
if you look at the Oshkosh selection here, it was a government. I mean, they've done so much government work right now. It
Yeah.
strikes me a little ironic because they don't have a footprint really in electric vehicles. They're going to have to bring some people on, is what I'm trying to say. Watch for either a company like Workhorse or Lordstown Motor or one of these people, these companies that have been making a footprint in the business. I think to start working with Oshkosh because this would be like asking me to go sew a pair of pants for you, Tom. I'm going to have to bring a tailor in to help me get that done. I can certainly tell you what pants are going to look good and somebody can contract it for me, but man, I'm going to have to bring somebody else in to do some of the work. So
Yeah.
watch it. I think Workhorse's story isn't done here yet. And obviously they filed some lawsuits, or not lawsuits, but inquiries to find out about the selection product because,
Right.
or
Why they didn't get picked. Yeah. So
right.
let's finish up on stocks, on
Yes.
the stocks this week. Riot Blockchain. So I made a kind of a bearish prediction on Riot, even though Bitcoin last week was sitting on near all-time highs. We in fact we did 58,000 on the weekend before the Bitcoin kind of crash and rebound, and now Bitcoin's sitting around 50,000 or so. But what goes up 10x with Bitcoin can go down 10x just as fast. And I looked at that as a pure hedge play against Bitcoin, looking at Riot going down. I got a lot of backlash, I want to say, on that call, especially on YouTube, where
Mhm.
people were saying, I'm going to pass. You don't know what you're talking about. Uh, you know, so here we are sitting, and last week Riot was trading as high as nearly $85 a share. Hey, we're back in the 40s now, so looks like time told the tale on that one.
Yeah, yeah. Facts and on your side right now, Tom. Where do you see support? Let's get to the nitty gritty.
40,
40
40 right
bucks.
now is where I see support. But there are other stocks. There are other stocks to look at if you really like Bitcoin to the upside. And I'm a long term holder of Bitcoin. But if you really like stocks to the upside, I mean, that's why I did that video. Don't buy Riot Blockchain, and it was because it was too expensive. Obviously, I mean, I don't want to toot my own horn here because at the end of the day, I'm not an analyst, I'm a trader. But if you take a look at Riot, it was way overdone to the upside. It was coming back. I mean, there were days this week where Bitcoin was flat or up and Riot was pulling back because there was just too many people on the wrong side. But take a look at GBTC. We talked about that. That's the Bitcoin ETF or Bitcoin. I can't call it an ETF. It's
Yeah.
a conglomerate of Bitcoin. There is Overstock.com. I call them the OG when it comes to Bitcoin. They were one of the first retailers to have Bitcoin as a way of purchasing their products. And then, of course, the new up and comers, the Tesla $1.7 billion purchase, Snapchat going in for $170 million purchase, MicroStrategy, which also came in too. These
Right.
three companies do not have anywhere near the implied volatility or the crowded trade. Maybe Tesla a little bit with what's going on with ARK. But I can tell you, as an option trader, they don't have the IVs like Riot does right now. Therefore, their options premiums are not as cheap. The inefficiency of them getting in it as options are not as wide. And to me, they make better purchases. Although I have to say, buying calls if you're bullish or buying puts if you're bearish on any of those, to me, makes no sense. I would rather spread that risk off,
Mhm.
and hedge your direction, hedge your theta risk, hedge your volatility risk. And so, any comments there, Chris?
You know what? First of all, I agree with you on Riot Blockchain. Let's take them one by one here. Riot Blockchain, love the 40 level at that. That also, we talked about the FIBOs. That's one of those levels. I'll let you expand on that because when you do your live stream, but that is something that's definitely on my point. Longer term picture, when you look at it, and you mentioned Tesla and those crowded trades, I like when you look at Overstock and some of those unknown. Everybody's looking at who's buying Tesla right now, who's been owning it, who's been actually taking part in that market for a little bit of time. Maybe and they're getting sucked down with the rest of the market right now. Anything with alpha over the last 3 months is getting knocked down. It's a whack-a-mole game right now in the market. So, but you said something, this long-term trend in Bitcoin, I don't see it going away. Flip it over to gold and continuing to go down. Bitcoin may have, and we've said this, Tom, Bitcoin may have turned into the inflation hedge, right? As people
Yeah.
are not buying gold, 10-year yield going through the roof right now. So
I mean,
I like what you're saying.
when
I like what you're laying down here.
the real question is, when does Bitcoin become the crowded trade? That's, I think, the real question, and I'm trying to answer that myself because I still think, even though gold is something that's kind of fallen out of favor with the new crowd, I
Mm-hmm.
do think that eventually gold's going to be, that gold has always been that long term. You can feel it. You can have it in your hands. It's an actual physical commodity. And yes, there's something to be said for digital. And I've done very, very well on digital. I mean, Bitcoin by far has been my best investment over the last 12 months.
Mm-hmm.
But I mean, there's some stocks out there. Chris, finally, let's talk about brokers. And, more
Yeah.
importantly, we've discussed Robinhood before, and we've discussed the Reddit group, and we've discussed a lot of, the problems that happened with Robinhood. We saw the Robinhood CEO recently testifying before Congress. And of course, he put it out there, and he apologized. It looked like when I was watching the C-SPAN feed,
Mm-hmm.
uh, a lot of people in Congress really have no idea what's going on. They don't understand. They don't understand clearing firms and the clearing process. They obviously don't understand margin and how it affects a brokerage firm itself. And it seemed like a lot of politicians were up there just getting their soundbite in. What do you think?
Yeah, I have to agree. The most interesting line of questioning I found, and her name escapes me. I think she was from Iowa, a representative from Iowa, when she talked about she and her husband were graphic designers. So they were familiar with behavioral psychology and all of these things that apps on your iPhone or your Google phone or whatever you're using are not taking advantage of, but definitely using as part of their edge. And Robinhood always touts itself as the number one downloaded app in the Apple Store, right? Do
Right.
you really want the number one downloaded app for your broker here? I think is a big question, and that's the point that she made. Are you getting rewarded for something besides investing? Are you getting rewarded for scrolling through charts and things like that because it's feeding the
Well,
behavioral
yeah.
of
I mean, there's something to be said about the fact that it has an endorphin type experience.
yeah.
And so, I mean, I get that. And you don't really want that as a trader, or an investor. But what's interesting is Robinhood, it really did kind of propel itself to be the number one app. But, there's been a little bit of a fallout there.
Oh
Um,
yeah.
I got a soundbite I want you to listen to. So Micheal Bolton has
Oh
created
boy.
a new song. I want you to hear his new song. You haven't heard this yet.
No, I've not.
I hope you can get some of this.
I could hardly believe it when I saw on Reddit today. Was hoping I could get it straight from you.
Oh my
It's a
God.
remake, Chris.
They told me about order flow, so I Googled, now I know. Think I gotta find somebody new.
Maybe he was a Robin Hood
So tell me
trader.
all about it. Tell me who you sell my trades to.
Oh my.
Tell me one thing more before I go.
All right, here comes the chorus.
Tell me, how am I supposed to trade without you? My stock's been in your app for oh so long.
Brings tears to your eyes, doesn't it, Chris?
It certainly does.
How am I supposed to trade without
All right,
you?
I will cut this down.
It's time I must.
That is
So that's out there on YouTube. One of my guys actually found it and said, "You won't believe this." But obviously, what he's doing is it's a promotion for yet another trading app called Public.com. So Public.com is entering the arena, and they decided that, hey, this is a great way to see if we can grab a little bit of the Robinhood defectors, if you will.
you know what? What is the message that you take from that? When we're in not the business, the brokerage business, and certainly you and I don't talk about who you should use to trade. But what's the underlying message in that? What did you hear in Michael's words there? How does
How am I supposed to trade without you?
What's that? What I heard is order flow.
Exactly.
And I think that is one of those things, and people are starting to say now about Robinhood, and everybody can make their own assertions or their own thoughts about it, but man, order flow has turned into such a big thing. And remember
Well,
that
you
old
know
thing.
what? A lot of people don't understand that. This comes right back to everything that I've talked about for decades now, is that just because something's free doesn't mean it's worthwhile. Free education. I mean, there's a lot of education that's out there free, but is it good?
Right.
What about, free commissions? So, Fidelity started the free commission thing back in the day. And then I think Merrill Lynch tried to grab onto that, or one of the big firms started it. It didn't catch on. The reason why it didn't catch on is because, Fidelity did it and they grabbed a few accounts, yes, but they didn't have the cool app that Robinhood did. They didn't give away the free stock. They didn't, weren't able to grab that new segment. Robinhood happened to be in the right place at the right time with COVID locking people down.
Yep.
I mean, what were they doing? And and they just, like I said, right place, right time. But free doesn't necessarily mean good. I'm going to take you back. I'm going to tell you a quick story as we wrap this up. So, long time ago, when I worked at Home Depot, so I'm going through college, I'm working at Home Depot, the paint department. So Home Depot had these paint wars, and I believe it was with Kmart, if I remember. And they were taking paint that was literally $15 for a gallon. And they reduced it to 14, and then Kmart reduced it to 13 and 12 and 11 and 10. Eventually, Home Depot was selling this paint for $1.99 a gallon. Nobody was buying it. It was the $15 a gallon, which everybody bought. When it hit $1.99, people stopped buying it. When asked why, the customer said, "I don't believe that paint's any good. There must be water in that can. It must be watered down paint. It's so cheap." The
Mm-hmm.
value of what was in that can dissipated. And that seems to be the same with a lot of stuff that's out there that that is free, including free commissions. And the problem is with free commissions, no one really saw how are they making money. All they thought was, oh, they're just grabbing a lot of customers and they're getting a lot of accounts. They're making money there somehow. A lot of people didn't know what the words order flow actually meant until what came out of this GameStop AMC era of trading.
So is this going to turn into a situation where we look at Robinhood and a few others, maybe maybe the entire industry, as you use the term payment for order flow, and it's reminiscent of everybody answering the question on how Google made money when search engines were seemingly free?
I mean, for the average investor and trader, and that's who we're talking to right now, they
Mm-hmm.
really don't care. You know
No.
what they care about? They care about at the end of the day that their balance in their account is higher than it was yesterday, last week, last month, last year. And so they don't care about all the what's going on in DC, what the politicians are saying, because we all know what's going to happen there. It's all going to be yesterday's news eventually. What the
Yeah.
investor and what you're looking at on the screen, what you guys need to focus on is you need to focus on, again, manage your own money. All right. Don't let somebody do it for you. All right. That's that's the one thing. Manage your own finances, manage your own money. Number two, get as much knowledge as you can. And whether that's through free areas, because free and inexpensive is good. There's a lot of good out there. I hope that what Chris and I do helps you with that. All right. But then there's some premium stuff out there that's good as well. That Bloomberg terminal I got behind me, that's not cheap. That thing's costing me about $2,800 a month. But you know what? There's a value behind that. So there is a value behind paid services. And then, the other thing too is that constantly educate yourself, have the right mindset, have the right tool set, and always realize that we're in a business, folks, where tomorrow I learn something new. I learn something new every day, and I know you do too, Chris.
Yep. Yep.
All right. So, hey, Chris, thanks for joining me again this week.
My
I
pleasure.
appreciate you being on. I know everybody watching this channel does. We'll be back again next week. Let's let Micheal Bolton take us out.
Uh,
And I'll see you next week.
all right.
All
Just
right.
see you, Tom. Have a great week.
You too. Bye, everybody. Take care. And there he goes.
Wow.
See you guys.